Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Thursday, September 11th, 2008. Let's start in New Zealand, where the manufacturing PMI for August fell to 45.7, down 4 points from July, and a poor indication for the economy. In a second release, food prices were up 2.7% in August, an unwelcome rise that is sure to continue to fuel consumer-level inflation. And more importantly, the Reserve Bank of New Zealand reduced its official cash rate by 50 basis points from 8% to 7.5%. The move surprised the markets and showed that policymakers are very concerned about the slowing economy and would like to jumpstart lending. The Kiwi-US dollar pair fell more than 100 pips following the announcement and was about 250 pips lower than its level from yesterday. Today's intraday low, near 0.6440, was a new two-year low. In Australia, employment figures for August surprised forecasts on the upside. The economy added 14,600 jobs, which almost tripled forecasts, and July's number was revised up modestly. The added jobs helped bring the unemployment rate down to 4.1% from July's 4.3%. In Japan, core machinery orders, a good barometer for future business investment, fell for the second straight month in July. The 3.9% decline was slightly better than forecast, but worse than June's 2.6%. Overnight, stocks in Asia tumbled, with the main Asian benchmark index at its lowest since November of 2005. European and U.S. stocks followed suit and were lower, increasing risk aversion in the markets. From yesterday's high near 87, the Aussie yen pair slid 300 pips to test 84. That's the lowest the pair has been since July of 2006. The euro-yen pair slid almost 300 pips from its global open to set a low near 147.50. European stocks were brought down by financials as credit woes circled the globe. With growth in the Eurozone stalling and an interest rate hike seeming off the table, the euro has been falling hard since its last meeting. The euro-pound continued to fall, breaking below 0.80 to a low near 0.7920. In testimony today, Bank of England Governor King stated that the central bank would continue to provide short-term lending, but that it was up to the government to enact a plan to stimulate mortgage lending. In the U.S., the trade deficit widened more than forecast in July, posting $62.2 billion gap between imports and exports. Imports were up 3.9% due to higher price of oil during the month. Exports grew a rather robust 3.3%. Jobless claims remained at an elevated level for the week ending September 6th. Though with the downward revisions of the previous week, it was actually a 6,000 improvement. Total claims rose to their highest in 5 years. The dollar-yen pair fell 170 pips from its open and set a new low for the week near the 106 level. That wiped away yesterday's gains, and risk aversion is again the main theme at the end of the week. The Greenback was up against some of its other rivals, including climbing to a one-year high against the euro near 1.3880. The euro, with its outlook for weak growth ahead, has been one of the worst performers this week. In Canada, the trade balance data surprised forecasts on the downside. The trade surplus shrank to 4.9 billion Canadian dollars as imports rose 4.6%, almost double the 2.2% increase seen in exports. New housing prices continued to cool, with the annual rate falling to 2.7% in July from 3.5% in June. The Greenback hit a one-year high against the Canadian dollar. First, the pair fell in the Loonie's favor as the markets focused on the concurrent U.S. trade release. However, after touching 1.07, the pair jumped 80 pips to test 1.0820 as traders digested the Canadian release. Tonight, New Zealand releases retail sales, and Japan posts a revised figure for GDP. Overnight, we get industrial production data from Japan and the Eurozone will also post its employment change for the second quarter. Tomorrow, the U.S. releases data on retail sales, producer prices, business inventories, and consumer confidence. Canada will review its capacity utilization rate. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com.